Analyzing the notes to the financial statements can also help you to identify the risk of a future increase in common charges or maintenance fees beyond ordinary increases for inflation. The notes to the financial statement is a section that can be found at the end of the building's annual financial statements. This section details and clarifies the information provided in the previous sections. Even though the entire section is important to read, it's especially important to scrutinize the sections on legal issues, the building's mortgage, and the building's land lease, if applicable. Litigation. Litigation in a building isn't always bad for a prospective purchaser. For example, what if the building initiated the lawsuit as the plaintiff and has already paid all expenses? If there's a settlement being decided, a purchaser could actually have upside if the settlement is favorable. However, litigation can also be bad, and most banks will need to know what's going on with the case in order to approve a loan. For example, litigation against a sponsor for faulty construction or the building next door suing the building for accidental damages isn't great. Fortunately, most of the time legal costs will be covered by the building's various insurance policies if it's the defendant. However, if the building initiated the lawsuit and a settlement is pending, then there may be annual legal costs that can weigh down a building's financials. Mortgage. Your real estate attorney should investigate the maturity date, the monthly payment, and any special terms of the loan. For example, does the mortgage have a fixed or variable interest rate? Is it an interest-only mortgage, or are both principal and interest payments required? Interestingly enough, a lot of co-op building mortgages these days are the interest-only variety, and thus similar to a term loan issued for a for-profit business corporation. You should also evaluate concentration risk within the building. For example, how many units does the sponsor still own, if any? In general, banks will raise a red flag if any single entity owns more than 10% of the outstanding shares in a co-op corporation. Land lease. Does the building own the land that it sits on? If not, then it'll be in a similar situation to the tenant of a rental apartment unit. When the land lease expires and is not renewed, the tenant will have to vacate. As a result, your attorney should carefully review this section to learn more about the maturity date and any options for extension or renewal. Furthermore, land leases have periodic increases in rent, either tied to some sort of inflation or consumer price index, or to the value of the land. Be very careful if the formula for rent increases over the life of the lease is tied to the value of the land, as this can result in huge increases in payments if the area has gentrified. You should also diligence who the landlord is. Most real estate attorneys won't be so concerned if the landowner is a government entity such as the Battery Park City Authority, who isn't likely to throw homeowners out on the street. However, what if it's a small building on a private land lease? Worse still, what if the land lease has only 20 years remaining and there's animosity between the landowner and the building? In this case, you should definitely run for the hills if it seems like the land lease definitely won't be renewed. Furthermore, banks typically won't lend if there's less than 30 years left on a land lease.